of the Diwali mahurat trading session on Monday, we bring you a special show on investing in real estate stocks and real estate investment trusts or REITs. Should these be part of your investment portfolio? Now, before we get the experts to weigh in, here are some of the big data points which are worth keeping in mind. Housing sales rose 60% annually in January to June this year across 8 major cities to touch about 1,59,000 units. This is the highest half-yearly demand in 9 years, according to Knight Frank India. Also, several listed real estate companies have reported their best ever sales quarters in January to March 2022. And with that, several of the leading realty stocks have also recovered smartly, not in this year, but from their lows seen 2.5 to 3 years ago. Now, the question is, with rising interest rates, will demand for housing continue to help lift realty stocks? And how do REITs perform in an inflationary environment? Joining me to answer these questions are Kaul, MD and CEO of TrustPlutus Wealth Management. We also have with us Ambareesh Baliga, Equity Advisor, and Pritesh Sheth. He is a real estate sector expert from Motilal Oswal. All right, I'm going to first go across to the wealth management person. Samir, what is the opinion right now on realty stocks? They have recovered from their lows, but down year to date, which I think a lot of companies are. And these are not part of the Sensex, so they're probably down a little bit more. What's the sense that you're getting? Are they going to make it to anyone's portfolio?
See, I think, Manisha, first of all, like you rightly said, real estate, especially both on the residential and commercial side, has seen a huge uplift in the last few months. Also, what's happened is that post-RERA, there's been a massive consolidation in the real estate space, and I think this movement away from unorganized to organized is most prominent in this sector. I think if you see the larger players, everybody pretty much worth their while is actually, reporting best ever sales and what have you. I think we should kind of separate real estate stocks versus real estate investment, because I still feel that real estate stocks have some work to do to give comfort to investors, especially in terms of transparency, in terms of accounting, and in terms of how they look at running their business. But we feel more comfortable. We have been comfortable on the REIT space now for almost 3+ years. And our view is that if you really want to take exposure into real estate, probably the best way to do that is through the REIT.
Okay, I'll come back to REITs just a little bit later. So you're saying realty stocks not in favor of investing in those right now because of the transparency on the accounting? But you're saying REITs is something worth considering. Ambareesh Baliga, would you agree? Because, Rakesh Jhunjhunwala always said that the return on capital employed in realty stocks just has never made sense for him to actually put his money behind the stocks. But then you also see that if you completely stay away from it, you miss the entire India housing story recovery. So how do you play it, and how do you play it best?
See, I think as far as investing in equity, I think one needs to time it a bit, especially if it's a real estate sector, because we have seen times when the real estate stocks have done extremely well, and there have been again long times when they have not done well, they have underperformed majorly. But then looking at the way the real estate sector is panning out, and also the way most of the stocks have actually corrected or underperformed in the last 1 year, I see an opportunity there. At least if you're talking of the next 2 to 3 years, because clearly, the demand in the real estate space, especially the affordable housing space, I think should continue to grow. And because of which, I think it's still a good time to invest in some of these real estate stocks. Especially the ones which have not been discovered. When you talk of Macrotech, Lodha or a Shobha, both these are good investments, but then everyone knows about them. Mm-hmm. But then you have such, a few stocks which are coming up extremely well. The companies are doing, extremely well, but it is still not recognized as much in the market. For example, someone like Arihan Superstructure. These people are leaders in the micro market like Navi Mumbai, which surely is among the fastest growing real estate markets with a visibility at least for the next 10 years or so, if not more. And people like these are having projects worth about 7,500 crores on hand to be delivered over the next 5-6 years. But then look at the enterprise value; it's less than 1,400 crores.
Wow.
And selling, in fact, more than 1,600 units per annum. I mean, this year they should be selling about, possibly about 2,000 plus. Whereas about 3 years back, they were not even able to cross 750, units per annum.
And you're comfortable with their reporting structure, the way they, the transparency on their accounting?
Let me tell you, when you look at a IT stock, you expect very high transparency. And when you start looking at real estate stocks, I think you should go down that bar a bit, because you should understand from where they have come. We need to give them more time to achieve the transparency levels of what the IT space is doing.
Okay.
So, if you look at it from that point of view, I suppose you'll surely see value in stocks like these.
Pritesh, would you agree that, most of the large broking houses like Motilal, ICICI, etc., focus on the big stocks and the big companies? So, you see reports on Godrej, you see now Mahindra, which is the only stock which has outperformed actually in this particular year, Macrotech, Oberoi Realty, but you're missing out the Eldecos, the Arihants, which are, more, let's say, slightly lower down, but probably have better books. But I'm not going to, have a debate about that. My question to you is, what's your view? Mahurat trading, looking at the fact that they're down Y to date, they melted about 10% to 12%, some of these stocks that you had a buy on, should one buy a little bit of those?
So absolutely, I think, this correction does give an opportunity for those who, are entering in late. Most of the stocks have corrected 10-15%, and for few of them, valuations does give a lot of comfort. For me, I think the cycle is just, not yet over, I would say. Although we have completed a bit of a journey, we are still, if you say, you quoted about 160,000 units being sold in the first half of FY and CY22. We are still back at what we were, probably 10-20% of what we are doing on a pre-COVID basis. We are yet to reach a peak of demand, what we have seen. And there are, various cities which have emerged from previous cycle to now, specifically Bangalore, Chennai. Those markets have completely evolved from previous cycle to now with what commercial absorption we have seen. So there is still a lot of steam left, in specific stocks, which are still comfortable in terms of how they are doing their business, in terms of transparency they provide with the quarterly data and all. So I would still say, I think, pretty much in favor of that.
Pritesh, pick up a few. Which are your best? Would you still stick with Oberoi and Macrotech, or you have other pickups?
So yeah, I think, those two names we still favor. One is, the purely reasoning is that they are the ones who are generating a cash flows, which is, like a cake for all the investors. And, with those cash flows, they are building up their future project pipeline, which will give, a further growth visibility. So those names we still favor. Each of them are entering into newer markets. Macrotech is going to Bangalore now. Even Oberoi at some point in time might look at non-MMR as a market of growth. So those two companies obviously will still like. But, as a market, I would say if I want to choose one where I want to get exposed to, it's probably Bangalore, and we had a very detailed coverage report on that. So Bangalore hasn't seen a potential which it should see in terms of residential absorption is concerned. And, we had a very strong 5-year commercial cycle in Bangalore, and that should eventually transform into a very strong residential cycle, which generally happens with a lag, right? So Bangalore has a lot of potential, and there are very good names who are there, likes of Prestige, likes of Brigade, Shobha. And, they give a comfort in terms of valuation versus all the large cap players as well, right? Okay. So, I think those would be the names that we would prefer. And I would agree with Ambareesh that, even on the smaller, developers space, there are players who are emerging. Mahindra Lifespace, as you pointed out, has been one of the prime story. There are a couple of more players like, Kolte Patil, who are expanding into Mumbai, scaling up there and also focusing on Bangalore as a market. So we would find these good players who have been under the shade in last 6-7 years, but now the sector is, the demand itself is helping them to, further look into different markets. So I think.
Are you not concerned about the demand, the interest rate cycle turning around? Ambareesh, you answer that very quickly because I do want to touch upon REITs as well. I mean, the fact that there could be some headwinds on demand now with interest rate cycle turning and quite dramatically.
Yeah, if you see the last 2 years, the demand has recovered extremely well. Most of the better known brands, like you said, have reported extremely good pre-sales. Quite a few of them have doubled in the last 2 years. And initially we thought it was a pent-up demand. Then people said it is low interest rates and government stops. But we are seeing the demand still continuing further. So yes, this interest rate hike could be a dampener for a while. Because what we see is that most of the buyers are end users. So they are not pure investors. So it's basically a necessity. So when it's a necessity, people find a way out. So in case of like a loan, people may extend their EMI period to ensure that the monthly outgo remains the same, or possibly try and garner more down payment. So the way I see it is, it could slow down for a short while, but then the demand growth will continue at least in the foreseeable future.
Okay.
And Manisha, the other interesting aspect which I've noticed in this property purchase is that when the prices are going down, the demand reduces. People, in fact, wait for lower levels, what we saw in the past 5-7 years. But when the prices bounce back, for whatever reason, like in the last 1 year, the prices had moved up because of cost push, and builders had to increase the prices. And then we see that because the prices are going up, the demand moves up.
Yeah.
Basically, the fence sitters jump in before the prices go further.
I agree with that, and I think Motilal Oswal report does highlight that fact, doesn't it, Pritesh? That people actually buy more as prices rise, and now that we are sitting in an inflationary environment, the replacement cost of real estate is also going up. Give us a flavor. Have the commodity prices now, settled at a comfortable level, or do you think there could be some cost push there as well, and that could dent the margins of the real estate companies?
I think on the commodities, things have been managed well, especially with demand being strong. All the players, especially from the listed side, have taken a price hike to the tune of 5 to 8%, and construction cost as a percentage of total sales is roughly 30-40%, depending upon what cities you're talking about. So even if cost inflation has been around 10-12%. The impact in terms of margins has been on an average around 3 to 4%, which has been pretty much passed on by the price hike that developers have taken over the last 2-3 quarters. And so those things have been managed well. I think steel was one commodity which was impacting the overall construction bucket. That has now pretty much settled in and has been stable for many months now. So not much concerns on that front with regards to as far as margins are concerned.
All right.
Yeah.
And both of you have already given us some of the stocks that you like in the real estate space, which can be looked at for motor trading. But of course, all the investors have to do their own research before buying anything at all. I'm going to come to REITs now. And, Samir, I was very excited, and I continue to be excited about REITs, and that's something I will accept. But if I look at Embassy Office Parks, right, this is the oldest listed REIT which has a 3-year history. There's been zero capital appreciation, and my dividend returns have been between 6.5% to 7%. It's not exciting. It's not looking as exciting as one would have thought that you will get some capital appreciation as well. So why REITs?
No, I think first of all, if people buy REIT for capital appreciation, it's the wrong reason for buying the REIT. I think people should be buying the REIT from an income generation point of view and not from a capital appreciation point of view. I think we tell investors that the capital appreciation is the icing on the cake, not the cake itself. And I think today when you look at with the tax advantage structure for the REIT, if you get close to 6% on a post-tax basis with a high quality underlying, I think it's a pretty good investment. I also think what has happened is that I don't discuss specific stocks on the channel, but I think that there have been some block sales. Of course, there's been a post COVID impact on occupancy. But the sense I'm getting is that when I look at analyst reports, I think the commercial absorption is probably at the highest level since 2012. The name that you took, their occupancy rates were almost 87%, which was down 7% from the peak. But I do suspect that as especially IT companies ask employees to come back to work full time in the office, you will start to see the vacancy levels going down. You will start to see the repricing on the lease rentals. So I think people should be very clear in terms of their objective. Yes, there hasn't been capital appreciation, but I still feel that the REITs are quoting at a discount to their net asset value. So at some point in time, you will see capital appreciation, but buy the REIT right now from the stability of income point of view, the post-tax income point of view, and the fact that the REIT starts to reprice the rentals every 3 years, that's an added advantage in a high inflation environment.
All right, quick view, Ambareesh, we have 30 seconds just left, but REITs, would you say that, yeah, better than FDs and, for stability in these uncertain times of the stock market, probably have some REITs in your portfolio?
See, there's rate hikes. FDs are returning closer to about 7%. And if you want a higher return, if you're looking at equity, you expect about 15% or so. So in REITs, I would say that if you're getting about 10-11% that's when you start investing in REITs. But then, like you rightly said, if one is looking at a longer term, which is what one should look at in REITs, I suppose that should be there in your portfolio. At least some part should be there in the portfolio.
Gentlemen, thank you very much for joining me and wishing you all a very happy Diwali. When we return, we look at how the hard asset real estate as a residential house, a commercial property has performed compared to equity, market, gold, NFTs. Stay with us.